Hello, friends. Welcome to Nirmal. I'm Piyush Jain, and today I'm bringing to you a new company which is bringing out its IPO. Very soon, going to get listed on the bourses. It's a microfinance company. Has been doing well, increasing its loan portfolios, AUMs by leaps and bounds over the last many quarters. The name of the company is Muthoot Microfin Limited, part of the big Muthoot Group. And today, joining us on the show is CEO Mr. Sadaf Sayeed. Uh, Mr. Said, welcome to the show.
Yeah, good morning, Piyush. Thank you for inviting us. We we are a part of a Muthoot Papachan group. Muthoot Microfin is an NBFC MFI, focusing on the microfinance business. We operate in a joint liability group model. It's a Grameen model of lending, where we form group of 10 to 15 ladies and give them loans, which they pay over a period of 24 months time. We have 96% of our branches in rural area. We are present in 18 states, pan India. We are a pan India player. We are a fifth largest NBFC MFI in the country, third largest in South, and number one in Kerala. We are the second largest company of the group, Muthoot Papachan Group, which is a diversified business conglomerate. The largest business is gold finance business. The flagship company is Muthoot FinCorp, and Muthoot Microfin is a subsidiary of Muthoot FinCorp. As of September, we have 10,800 crores of asset under management, with 1,340 branches spread over 18 states and union territories and 329 districts. We cater to around 3.2 million customers. The unique aspect about our business is that we are a technology driven microfinance company. We have a strong in-house team who has developed our technology, the loan management system, loan origination system, the customer app, and around 1.5 million customers of ours have downloaded this app. We call it Mahila Mitra app. This app helps us in digitizing our collection. So 100% of our disbursement is already digitized, and incrementally 33% of our collection is also digitized
Oh,
through
that's
this.
great.
Yeah.
Sure, please
And
continue, sir.
yeah, and in terms of our asset quality, we have a GNPA of around 2.37% and net NPA of 0.33%. Our disbursement that are happening post-COVID, which represents almost 97% of our book as of September. In that book, our GNPA is only 0.67%. And this superior asset quality has been achieved by extensive use of technology. So we have developed a proprietary scorecard with the help of Equifax. This scorecard helps us to understand the customer better. We have studied 6.5 crore microfinance customers and their credit behavior, and based on that, we have identified the key parameters which influence the credit behavior of the customers. Uh, there are around 40 parameters which have an influence, and we have given weightage to these parameters. And based on this weightage, each and every customer gets a score, and on that score we categorize customer into four categories: low risk, very low risk, medium risk, and high risk customer. So our focus is to maximize our wallet share in the low risk and very low risk customers. And typically in a lending business, in risk parlance, we call there are two types of error. Type 1 error, which is you lend to a wrong customer, which any lender can make. The second error is type 2 error, which is you have a good customer in front of you, but you do not give the right amount of loan to that customer. So a customer deserve a 1 lakh rupee of loan, but you give her only a 20,000 rupee of loan. So you're missing out on the good business of 80,000 rupees. This scorecard helps us to avoid that mistake. So by focusing on the low risk, very low risk customer, we are able to maximize our wallet share with this segment of customers. And as a result, our portfolio quality is rapidly improving, and which is also resulting in our better financial performance. We are reporting a growth of 36% CAGR in our AUM, and our uh, profits have grown. Last year, we had reported 203 crores of total comprehensive income for the full financial year. This year, for the 6 months itself, we have crossed around 211 crores and 205 crores of PAT. And we are reporting an ROA of around 4.2% and ROE of 23.7%. and the business is growing rapidly, and our focus on growth is on two counts. One is on expanding our distribution network. We have opened 260 branches last financial year. 160 branches we have already opened in this financial year, and we'll further add more branches. And these branches help us acquire more new customers. So last year we had acquired 7.5 lakh new customers, and this year already we have acquired 4 lakh new customers. So our growth is coming from expanding distribution, acquiring new customer, but at the same time ensuring that wallet share of our existing customer remains with us and they remain with us. We have one of the highest retention ratio in the industry of our customers, 84% retention ratio of our customers.
Right. And did I hear the number right? You had 7.5 lakh customers, another, I must have missed the number, but you actually have added another 4 lakh customers. Does it imply you already have 11 lakh plus customers? Was that number right?
We have 3.2 million active customers, so we are 32
Oh,
lakh
okay.
customers.
Sorry. Oh, right. So basically 32 lakh customers. And how many branches did you say, sir?
1340 as of September.
And over the last 2 years, how many new branches were opened?
So last year we have opened 260 branches, and this year already we have opened 160 branches. So put together 420 branches in the 18 months period.
Right. And will it be fair to say that around 60% of the branches are mature and these 400 branches would be actually in their ramp up period? Like, does the maturity period is same like the industry for you also, about 3 years, or it is shorter?
No, for a microfinance business, the tenor of the loan is 24 months. Whatever loan you give within 24 months, it comes back. And usually the repayment rate is 99%. So in our case also, the repayment rate is 99% on time. So very little delinquency. Weighted average tenor on the books is around 18 months only. So typically the branch breaks even in 1 year time, and it reaches an AUM of close to around 3.5 or 2 crores within 1 year time. On an average, we have an AUM of 8 crores, 8.1 crores per branch.
Okay, so breaks even in 1 year, which implies even these new branches would be breaking even next year. And then perhaps, as you're saying, the second year would be the where actually they would be ramping up towards the sort of maturity AUM. So that looks very interesting. From the perspective of geographic concentration right now, where actually you see the highest opportunity versus your presence?
So I think we are a pan-India player. We are present in 18 states. Kerala, we are a number one player. We have significant market share there. Tamil Nadu also, we are among the top players, and we have a significant market share there as well. 51% of our AUM is in South India, which is three states: Kerala, Tamil Nadu, and Karnataka. 25% of our AUM is in North, and around 13% of our AUM is in East, and around
Mhm.
10% of our AUM is in around 12% of our AUM is in West. Our focus is to ensure that in the South, where we are market leaders, we continue to retain that portfolio and continue to retain that position. In North, we are focusing on acquiring more new customers and reaching out to the more financially excluded clients. So our agenda is financial inclusion, and with the
Mhm.
use of technology, we are also promoting digital inclusion. So one of the features of our
Sure.
business is this customer app that we have developed. So far, out of the 3.2 million customer, 1.5 million customers are on this app, and this app brings a lot of efficiency. This is a
Mhm.
great tool of providing transparency and empowering our customer, because typically in microfinance, the customer is dependent upon the field officer to communicate with the company. But
Yes.
with this app, the customer can directly communicate with the organization. She can request for an additional loan. She can check her eligibility for the loan. She can check her repayment status. She can also check her loan track record, and she can also use this app to buy digital gold if she wants to. So
Okay.
this app is a great empowerment. The most important feature is to convert our collections into digital. 100% of our disbursement is already digital, but
Mhm.
incrementally 33% of our collection is also getting digital. So the advantage of digital collection is that we are able to, first of all, the productivity of the field officer increases, because typically in a microfinance operation, a field officer has to collect money, bring it to the branch, reconcile it, and then go to a bank to deposit that money.
Hmm.
But with digital collection, the money directly comes into our bank account. So the field officer gets more time to do business development activities
Also,
and
time to collection decreases, your working capital requirements decreases, thereby you're able to churn more, you're able to
yes,
increase the leverage because you're able to actually give out more loans. So
yes.
again, helps across the board for you. What's the current
And
leverage you're
also,
operating, sir?
sorry.
What's the current leverage you're operating at?
So we are at around debt to equity of 4.2 times. But if you look at in terms of our equity raise that we are raising around 760 crores of primary. We have a capital adequacy ratio of 20.4%.
Mhm.
Definitely, with this additional capital, our capital adequacy ratio will improve significantly. It'll be close to around 28%. So debt equity ratio will come down drastically.
But
We
in your industry, a leverage of 6 times is all good, right? Like, what's the sort of target leverage within your own company?
So definitely RBI allows us a capital adequacy of 15%, which is 6.6 time leverage. But nobody really, in a realistic manner, operates at a 6%, 6 times leverage. We have our internal CAPA associated internal leverage policy also. As per our company, anywhere when our capital adequacy reaches 18%, we raise
Hmm.
additional capital. So,
Okay.
in terms of that debt to
And
equity, we are
that should be around
comfortable.
5 times, right?
Yeah,
18%
that is
capital adequacy is roughly around 5 times.
yeah. So that is where we are comfortable up to 5 times of leverage. We are okay, but beyond which we think that we should raise another round of capital.
And I'm just revisiting the numbers here. So if you're raising 700 CR, sir, how much of that actually is going to go towards lending?
So the entire money that is we are raising is going for capital augmentation. The money would be
Right.
utilized to expand our business, open more branches. Also, we have a lot of focus on technology. We have a 102-member team in technology who has developed our app, who has also developed our loan management system, loan origination system. The
Hmm.
capital that would be required would be for leveraging this equity to borrow more money from banks and disburse loan, and also to expand branches and invest in technology.
Okay. And I would believe that this 700 CR, like roughly amount, would be actually enough to actually increase borrowings or the lending by another 3,000 crore loan book. Would that be a fair estimate? Because you won't
Yeah,
need another fundraising before that.
we are growing at a 36% CAGR. We will definitely, there is no reason we should not continue to grow at that pace, because the industry is also growing at a 25% to 30% CAGR.
Yes.
And this capital would be suffice for us for the next 2 years. So we will continue to grow, and our internal accruals, we have a ROA of around 4.2%. So those internal accrual will also help to continue to grow at that pace.
Right, sir. And in fact, ROA is actually quite good. And what is the sort of NIMs you're operating at?
So our current NIM is 12.39%. Our
Mhm.
yield on the portfolio is 23.9%. 22.9%, and we feel that our lending rate is around 23.5%. This was a rate which has come in because of the RBI liberalization of the policy, and we feel there is still some way of our NIM to go up.
Oh,
Definitely,
really?
the efficiency.
I,
The
I, I actually was thinking the 12% is actually a very good, strong in NIMs. You believe that NIMs can go up? Is it largely because of the operational efficiency, or you actually spot an opportunity where in the market you actually can garner more NIMs?
So I think there are two aspects. One is like with the capital augmentation, we anticipate that our ratings would be definitely upgraded. We feel that it is a possibility. We are a today A plus rated microfinance entity. If we are upgraded, we will be double A entity, and we will be able to access capital from bond market, also from insurance company and mutual funds, which can definitely bring our cost of fund down, which will help us to improve our NIMs. Also on the efficiency side,
Double
we
A,
have used.
if you allow me, sir, double A rating, does that actually will help you in reduction of by about 50 basis point, 50 to 60 basis point?
Yeah, around it definitely can lead to around 25 to 50 basis point reduction in cost of fund.
Okay. Okay. Please continue. You were saying something.
Yeah, so on the efficiency side also, we are using technology to bring down our cost to income ratio. Earlier,
Mm-hmm.
our cost to income ratio was around 64%, but because of use of technology and because of the business that we have scaled up, we have been
Just come
able
to
to reduce
51%.
yeah, cost to income ratio is now 46.6%. And
46 in the first 6 months of this year?
yes, correct.
Right, and this was my actually next question. You've already answered half of it, and I wanted to ask you uh, if you've reached already 46%, where we are right now in terms of optimization. Because I was actually thinking that perhaps there will be a time where you'll start hitting that the optimum area of 38-40%. Is that something where you really aspire, or this is something where you think the sort of most bulk of the efficiency work has been achieved?
No, see, I'm not allowed to give a forward-looking guidance, but I can give you a sense that
No, no, I'm not
right
asking to
now,
focus. I'm just asking
yeah, no,
how much actually can be achieved.
yeah, I can give you a sense because like around 3.2 million customers that we have right now, around 1.5 million customers are on the app. So, which is around
Hmm,
47% of our customers.
sure.
We definitely want to have maximum number of our customers on our app, and which could be 80 to 90%. And once more and more customers come on our app, definitely there would be more efficiencies which will come in the operation. We have done an extensive survey. We have identified that 84% of our customers have a smartphone. So definitely there is a
Okay.
potential of those 84% customers to come on the app, and bring that will definitely bring in efficiencies.
Makes sense. Absolutely makes sense. And thereby, actually, you have more room over the next many, many quarters to actually keep building more efficiency in the system due to your technological prowess. So I think with that good thought, and I think our viewers will really take note of all the developments and also very strong sort of return metrics which we have been talking about. Looks like a great business, and from that perspective, we would, from our side, from our viewers, would like to wish you all the best wishes for a very successful listed journey and also very successful IPO. Thanks a lot, sir, for coming on our show.
Thank you, Piyush. Thank you. Thank you very much.
And dear viewers, hope you enjoyed this conversation and learned more about the company. For now, it's a wrap.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.